We're going to do some price analysis in this video for Bitcoin as well as the altcoin charts. There's a lot going on this week. It's going to be an absolutely incredible, crazy, volatile week. Hit the subscribe and like on the way in. I appreciate you cruising through. I want to get right into the data before we even look at the charts. This is very important to me, what is happening in these headlines. So this was actually yesterday. Goldman Sachs raises its 12-month US recession probability to 35%. It was at 20%. So it went from 20 to 35%. This is what we can call and define this as a fear headline. If just somebody not looking at anything other than headlines just sees this and doesn't do any type of research into kind of cycles, and I'm talking about from a monetary cycle perspective, macroeconomic, crypto cycle perspective, this looks bad. I want to show you a headline from August 5th, 2024. Goldman Sachs has increased its prediction of a US recession in the next 12 months, up from 15% to 25%. So this was August 5th, 2024. Let me show you that date on the charts. Goldman Sachs, that fear headline on the charts in terms of August 2024, right here. Remember, this is S&P 500 falling on the weekly. And if we go to a Bitcoin chart, it's even more kind of noticeable what this was. August 5th, 2024, capitulation, the absolute bottom on the Bitcoin chart, the absolute bottom on the altcoin chart. And you can see it here. And so on the altcoin chart, since that fear headline about the recession spreading, altcoins put in the bottom, and obviously there was sideways and choppy waters. Look at this, for months before actually breaking out. And this is what I want to make a note of as I'm talking. Be prepared for something similar, right? Choppy waters, still fear, a lot of unknown. But from that moment, altcoins up. This is altcoin total crypto market cap, up 128%. Bitcoin was up around 118%, so around 120% from that headline. The reason I'm bringing that up to start this video is be very careful out there, everybody. Not only with headlines that are coming out just about Goldman Sachs and these massive firms. I very much think, and I've said this time and time again, big money wants to absolutely shake retail out right now. And I think that is what's happening because the macroeconomic data that we've been tracking on this YouTube channel, especially as we're kind of getting ready to enter April, and what we're about to talk about is very similar to the landscape back here in December 2018, a final shakeout. And guess what? That was a bottom. And this was when there was the tariff fears happening with Trump. This is when people were calling for recession, calling for bear market. I think we're in a very similar area. I'm not saying the absolute bottom is in, but I am saying in the short to midterm, I think we're going to see a reversal very soon, and the bears are going to be very surprised. So be careful out there. Not only with the headlines, be careful with the comments, especially on YouTube for some reason. Be careful with the comments on YouTube because there are a ton of bears that are here right now. So that's that. Now, I want to just interject this one piece of data on top of that because the August data, which means what was happening in August while those headlines were circulating, is obvious. Whales are accumulating. This is from yesterday, by the way, but whales are accumulating at the largest rate since late August 2024. So during that bottoming out consolidation in August for Bitcoin and for altcoins and all of that, in August, guess what was happening? Whales were buying. And right now, whales are buying at a similar rate. What does that say to you? What does that say to me? I'm paying attention to these data points because on the macro, they are incredibly important. And even Bitcoin chart on the macro looks great, right? Altcoin chart, people are very frustrated with, and I get it. But from my perspective, before we really start diving into the shorter term price analysis and maybe what to anticipate this week, because it's going to be a crazy one, if you just think about my perspective for a moment, I've been covering these markets through a lot of volatility, and many of you have been there, right? All the way back here at the bottom of the bear market, 2018. COVID, swing low, almost testing 2018, years later, testing those lows almost. And just going into a bull market and then a bear market, covering this whole bear market and then this higher low. And now we're in another higher low as we're entering this new phase of quantitative tightening slowing down. That is a very big signal that we need to pay attention to. And with that, we have this week's headlines. So I highlighted three that I would say are probably the biggest. Obviously, Liberation Day on Wednesday, the reciprocal tariffs that Trump is just implementing starting on Wednesday is just going to fuel uncertainty. It's going to fuel volatility in these markets. My continued thought is, number one, this is going to be long-term and even midterm, very good for America. But even more so, these headlines will be forgotten soon. Okay? Just like the tariff fear headlines that were circulating back in December, right here in that capitulation, they would be over soon and markets would continue. And the thing is, and I did a video on this the other day, I've been posting about this, quantitative tightening, this green line that you see here, was coming to an end right there, right? So while markets were bottoming there, we were getting the Fed pivot. And we are in a very similar thing. High tariff fear, Fed pivot incoming. We don't know exactly when or how, but this ties into the headlines because we have March jobs report coming out on Friday and Fed Chair Powell speaking on Friday. So we can speculate all we want about what the jobs report will look like. Also, we can speculate, hey, if it's better than expected, what that will do. If it's worse than expected, what that will do. Equities, crypto might respond more positively if it's worse than expected, because that's going to kind of signal, hey, Fed needs to move quicker now in terms of getting quantitative tightening to end and really on its way to quantitative easing. So a bad jobs report could signal to the market, hey, Jerome Powell might actually step up his game in terms of how quick he's going to move, because that's just the way these market cycles work. Now, I will say this. What does he actually say on Friday? So the thing about it is, it's Monday right now. We have all this buildup of anticipation until Friday. And so with that being said, what happens on these charts? So we have so much data. It's absolutely incredible. I feel like I should just sit down and do like an hour-long video, just kind of slowly talking through each of these points. But I do want to kind of try and condense it. All of these things are happening. It's going to be a volatile week. What can we anticipate? Well, for me, it's very simple. If we go back to the Bitcoin charts, Bitcoin, if you put aside headlines for a moment, is doing exactly what it's been doing really since bear market lows in 2022. Higher lows in between the 20-week and the 50-week moving average, right? Higher lows between 20 and the 50-week moving average. And even most recently, we put in this swing low right above the 50-week moving average. You all know the inverse head and shoulders on the chart. Throwback to the neckline. We've tracked it since Bitcoin's above 100,000. It's made the move. But with this volatile week, what is in store? And this is really kind of one thing I wanted to point out. I think what we should continue to do, or at least this is what I'm doing. When I'm looking at these charts and I'm waiting, especially on a week like this week, even right now, you're going to start seeing probably on X, on YouTube, man, we're pumping, the bottom is in, blah, blah, blah. My thought is this. This could be a very long 5 days going into Powell speaking on Friday, and we could get rejection here at the 20-day moving average. It's like 84,000. We could go lower. We can kind of start dipping right into this previous swing low back here. What I'll be paying attention to is the bottoming out formation, and this is what I've been trying to anticipate anyway on Bitcoin and altcoin markets, and we're going to get a sense of what this looks like on altcoin markets in a moment. But look at the volatility here, right? It just continues to test previous lows. Now, here's that August 5th move. We are in a very similar environment, kind of from a fear headline perspective, sentiment perspective, and even data perspective, right? We just looked at whales accumulating at a similar sense compared to right here. But just look at Bitcoin exiting that area. To many, it probably looked like, man, we're game on, we're exiting, and then boom, we had to retest the area. But during that retest, what was happening on things like the RSI, right? And this is a daily RSI, but you can see putting in a very nice higher low in terms of the momentum of Bitcoin. And then if you go to Bitcoin on the weekly and we start evaluating, well, what's going on right now from a momentum perspective, this is probably for the more midterm and macro reversal we're looking for, one of the best indicators to look at. It's the most simple. It's a RSI. We're waiting for still, and we've been talking about this, the breakout above this trend line on the RSI. Historically, if you just zoom out on the weekly, going all the way back to 2018, when Bitcoin breaks these trends, right? And look at this. Here's the 2019 breakout. Look, here's the 2018, very similar tariff environment bottom that led to the breakout of that trend line. When we see these breakouts happen, we usually historically see a higher high for Bitcoin. And check it out. That's the move we're waiting for. Check out the MACD, kind of just the momentum trying to start swinging on this histogram. It's been a painful move, right? This kind of, you can see MACD line crossing below the signal line. It's been just downside, consolidation, uncertainty. But when does this turn around? And does it look similar to that 8-month consolidation turnaround we had back then? All in all, everybody, you can see Bitcoin charts holding up very strong so far. That does not mean we won't put in some type of lower low even. We could break these previous swing lows. The weekly can fall lower. We have this kind of area, this channel, the 60,000 to around 70-some thousand, $72,000 target potentially as support, a higher low support from this swing low in play. But in that environment, while whales are accumulating, we're about to get quantitative tightening. What do you think happens next? I don't think it's a move like this when quantitative tightening was beginning. I think it's a higher low, and I think the cycle will continue higher. And with that said, that's why I said earlier today, I posted on X, we're in a brand new kind of cycle. The one where Saylor keeps stacking billions of Bitcoin, nation states rush to buy Bitcoin, and institutions begin the era of altcoin accumulation. A macro mind view is the way to win in crypto. That was true 10 years ago, and it's true this week. This is something I learned kind of early on when I started doing these videos at the top of the bull market back here in like 2018-ish. I learned that I think the best approach for me is going to be the macro long-term view. Survive the bear markets, thrive in the bull markets, and that's kind of my approach to these markets. So that's where I'm coming from. Looking at altcoin charts. Altcoin charts, even if you're just looking at the altcoin charts, it really is crazy. Bear market lows around 400 some billion, and we've just been putting in higher lows since that time. There's that high fear August moment for altcoins, and you can see what happened from that moment. We had a nice run. Many of us, I thought altcoin season was beginning. It was not. I was wrong about that, and for me, that just kind of is what it is. I'm trying to adapt and pivot with the data, and for me, the data is to say, it doesn't mean that altcoin season isn't going to happen, altcoin bull market not going to happen. It just means this cycle is prolonged. And I think as I've really been studying the data, for me, what has become very kind of obviously true and clear is that monetary cycle pivot has not played in so nicely with the time frame of this cycle. But guess what? That pivot is coming up, and it's coming up soon, all while global M2 money supply is increasing. That's for another video, because what that indicator indicates, kind of a leading indicator for like these higher risk on assets like crypto, a pump is forming, is what that data is saying. And that's for another video. But going back to the total crypto market cap, this is altcoins. This can be choppy. This can get choppy. I want to make a note. We were even closing daily candles. This is a daily chart, lower than the closes of the initial high fear August data that we're looking at. We were closing lower. This looked absolutely terrible. So what happens on this chart? We could start closing lower than what was happening here. We could see this chart. I don't know, maybe we bounce a little bit for a couple days, and then going into Friday, Thursday, Wednesday, Thursday, Friday, we start just capitulating. I don't know what it will look like. We could go lower. But again, I draw our attention to what are the RSIs doing? This is a daily. If we change this to a weekly chart, I think it will be very important to just watch the bottoming out formation of this RSI, right? And this is just something that I think historically is probably one of the most important indicators to look at. The consolidation, the bottoming out of these RSIs, because what we're waiting for at the end of the day is kind of what we get time and time again. And that is to say a reversal of the RSI. And you can see this could happen very quickly on the altcoin charts. So now, in my view, from a macro perspective, I'm not saying short term, like this week, there's going to be people out there that want to short the market, and that could be a very good play for them. I have zero interest in that. I've always had zero interest in that. But now in the macro, for me, is not a good time to be bearish. I think it's an incredibly risky time to be bearish. I do want to say this just from a kind of my content creation perspective. Compared to last cycle, when we get there, because I don't think we're there yet. I don't think the bull market has even happened yet. When we do get there, the overbought, the hype, the euphoria, I want to do a better job of starting to talk about the incoming bear market than I did last cycle. But the reason I'm not talking about a bear market right now is because I do not think we're entering a bear market. And that's all it is, everybody. I say time and time again, I could be completely wrong about all of this, but I just want to put out there what I'm thinking. This is my approach to the markets. I'm trying to manage my risk the best I can. Later today, I want to do a Cardano and Ethereum video. I think these two altcoins, these blue chips, do such a good job of kind of helping see the path forward for this bull market and for this choppy week even. So hit the subscribe if you're out there. Please turn notifications on. I really appreciate all of you out there. I got a ton of awesome comments in the last video. I just want to say I really appreciate that. That was incredibly encouraging. I don't know where it came from, but was a huge blessing to me. So thank you to all of you out there that have been watching. I appreciate each and every one of you. If you enjoyed this video, please smash that like button. I'll see you in the next video. God bless.